We all think we know silver. It's jewelry, maybe some old coins, poor man's gold, right? But what if I told you that this metal that we all take for granted is actually at the very center of a story about artificial intelligence, the entire future of energy, and a financial system that's, well, showing signs of a massive fracture? It's a crazy story, and it all kicks off with one truly astonishing number. Here it is. In late 2025, the price of silver didn't just climb. It exploded, absolutely roaring towards an unbelievable $58 per ounce. And let's be clear, this wasn't some minor market fluctuation. This was a historic, headline-grabbing surge that nearly doubled its value in a single year. And just look at the speed here. This wasn't some slow burn. On October 9th, it smashes past $51. Just a week later, boom, it hits $54. By the end of November, it's already at 56, and then just blasts right past 57. I mean, this isn't just market noise, folks. This is a massive signal that the fundamental rules of the game are changing, and fast. Now, of course, whenever an asset moves this fast, there's always an official story, right? There's this neat little set of explanations that everybody kind of agrees on. So let's start there. Let's round up the usual suspects for this crazy price surge. And look, to be fair, all of these points are true. The market is absolutely pricing in Federal Reserve rate cuts. Investor demand is through the roof. Global uncertainty is definitely adding fuel to the fire. And supply is genuinely tight. It's really the perfect textbook recipe for a rally. But here's the question we really have to ask ourselves. Do these factors, as real as they are, do they truly explain a near 100% explosion in price? I mean, does that official story feel complete to you? Or does it kind of feel like it's missing the main character? That's because just beneath the surface of all the financial news and the market chatter, there's a much bigger, much more powerful engine at work. And this isn't about temporary market cycles. No, this is about a fundamental structural shift in our entire civilization. It starts right here. At the very heart of the AI revolution are these massive data centers, just packed with powerful GPUs and servers. And what's the one metal that has the unmatched electrical and thermal conductivity that's absolutely required to make all of that hardware run? You guessed it, silver. And it doesn't stop there. Then you've got electric vehicles. Every single EV that rolls off an assembly line today relies on incredibly complex electronics, connectors, and components. And all of them require silver to function. And what about the green energy transition we need to power all of this new tech? Well, the special paste that's used in virtually all photovoltaic cells to conduct electricity, it's made of silver. So the push for clean energy is, at a fundamental level, a push for more silver. So here's the crucial point. This new demand is completely different. It's what economists call structural demand. This isn't just a factory ordering more silver because the economy is good for a couple quarters. No, this is a one-way accelerating demand that's driven by the very architecture of our future. And here's the kicker. Unlike gold, which gets hoarded, this silver gets consumed. It's used up, gone, and often totally unrecoverable. And this quote just brilliantly illustrates the new reality we're in. We have to stop thinking of silver as just a monetary metal or some kind of hedge against inflation. It's now critical infrastructure. It's as essential to the 21st century as steel was to the 20th. Okay, so this brings us to the next really fascinating part of the puzzle. If this incredible physical demand actually exists, then why has the price been so low for so long? Well, the answer lies in the strange, almost two-faced structure of the silver market itself. You see, the silver market is really two separate worlds living side by side. On one side, you've got paper silver, this whole world of financial contracts and derivatives traded on exchanges like the COMEX. This system creates an illusion of a near infinite supply. On the other side, you have the real world of physical silver, the actual metal that tech companies need to build the future. One is just a representation, the other is reality. And the scale of this disconnect, well, it's staggering. Get this. For every single ounce of physical silver that's registered and ready for delivery in the COMEX vaults, there are 28 paper contracts all claiming they own it. Think about that. That's not a small discrepancy. That's a system built on extreme leverage. And that system is now showing very visible signs of cracking. We're seeing things like a backwardation, which is a super rare market signal where people will pay a huge premium to get the metal right now instead of waiting. That's a classic sign of a supply squeeze. The cost to borrow physical silver is soaring, and most important of all, the physical inventory in the vaults is just being drained away. These aren't just anomalies. They are the tremors before the break. So, what happens next? What happens when this unstoppable force of real-world structural demand finally collides with the fragile, paper-based illusion of the market? Well, the truth is, these two forces, this exponential need for physical metal on one hand and a suppressed paper price on the other, they simply cannot coexist forever. They have been on a collision course for years, and the AI revolution just stomped on the accelerator. You can really think of this as a three-step process, almost like a phase transition in physics. For years, we've been in step one, the distortion. That's where the paper price has hidden the growing physical scarcity. But now, we are entering step two, the squeeze, where that physical demand is literally breaking the system. And that leads, inevitably, to step three, the revaluation. This is where the price is forced to violently reset to reflect its true fundamental value. Now, it's tempting to look for historical comparisons, right? But this situation it's unique. The 1970s oil crisis was about geopolitical control of a resource that was actually abundant. The Bronze Age collapse happened because of fragile trade networks for tin, but eventually a better substitute, iron, was found. What's happening with silver is completely different. The scarcity is planetary, the demand is structural, and for its most critical uses in AI and high tech, there are just no easy substitutes. This quote just captures the sheer scale and the urgency of what's unfolding here. This is not a story about a single commodity or some temporary market event. It's about a fundamental shift in the very building blocks of our technological civilization, and it's happening right now. So, as our world becomes more and more dependent on the intelligence and the clean energy that only silver can make possible, the market is just beginning to wake up to the ultimate question: what is the true price of powering the future?